Put me on there, Boris. All right, man. Here we are live. We're at what episode? I think we're at episode 62 Friday. Now, fact, real quick. Institutions are trying to steal from you, whether you believe it or not. Fact, institutions manipulate the market, okay? They instill fear so they can profit the most. Fact, okay? My current UVXY position, which I entered into today, and I bought more, I'm down 22%, okay? So I'm not happy about that. Another fact, I'm not worried about the market. The market was oversold. And I'll give you two reasons. Number one, I spoke to some of my buddies on Wall Street, all right, and they were buying various indices at close. SPY, OIH. So if oil and the Dow somewhat rebounds, and I get politicians right now are playing fear into the market, okay? They're telling you their COVID spiking. Everybody, not everybody, but there's a good portion of the population that are vaccinated, except if you're in like the middle states. Alabama, Mississippi, etc. Not so good. Okay, let's move on to the lesson. Okay, anybody that's with me today, thank you for spending your Friday after hours. I will talk about specific positions, but we're gonna get into the lesson. The lesson is you have to trade without emotion. You plan accordingly. So if you think the market is going to dip, you sell your positions at open, okay? Or during the spike at open, and we're going to talk about that in a minute, okay? If you're entering into a position, then you're looking for the biggest dip. If you're averaging down and you think the market will continue to throw up on itself, then you're not averaging down yet. When you think you see the bottom, and I guess we haven't seen the bottom yet because the market tricked me, okay? I'm first to admit it. I was fooled today. I thought I saw the rebound. And then you know what? When I tease sometimes that they will drop it off, that's what they did today. They gave you the cup and handle, and then they made it, they fell off. The UVXY was spiking. Now, I do think the UVXY spiked about 40 cents, a little too much, just based on my mathematics with the SQQQ and the SDOW and how they relate or correlate to each other. So I think it's already 40 cents a little high. So I'm thinking it should be more like $29 or $29 and like 80, I don't know, 29 or whatever, just under 29. I'm expecting, now if I'm correct, and I'm not worried about the weekend again, you should see Monday morning when futures are whatever they are, as long as the futures aren't red by like 200 points. Let's remember today, NASDAQ was down like 25 points. The Dow was down 110 points. At that time, the UVXY was down. It was red. The point is, we don't need a tremendous green day. Now, I happen to think that the market's going to be really green on Monday. All right, that's just my personal opinion. And I might get people that are saying, this dude is absolutely crazy, okay? But if the market is absolutely green, like strong green on Monday, then please come back and watch me again on Monday after the market on YouTube at 4:30. Okay, let's get back to trading without emotion. So when we're selling something, again, we're putting the same order every day. So if we have options that expire August 20th, let's say I gave an alert today with EVGO, okay? I already put in my sale order. Now, it did get hit today, but I paid, what, $2.05, and I put in my sale order for $2.95, okay? Point is, if it had spiked today and the markets had changed for some reason and the stock had spiked, I would have sold. Guess what I'm going to do on Monday? I'm going to plan ahead. I'm going to do the same thing. I'm going to ask for the same exit strategy. What is it? 295 on that, which would give me like a 42% profit. I don't care. I might miss out on more. I might miss out on less, but I'm going to keep doing that day after day until August 20th, until it gets hit. Now, if we're at August 13th and shit's not moving, I will come on and update you. But that's what I do with all my positions. So some days my positions will sell. Other days I'm averaging down. Other days I'm doing nothing. Today, the only thing I was looking at is for when the UVXY spiked the most, and I missed it. I thought the correction was at 2 p.m. I went all in with my money. I'm down about what, like 22%, about $7,000, over $7,000, $7,300 and like $20. It's on my spreadsheet, not your spreadsheet, my spreadsheet. All right, so we trade without emotion. So I'm going to give you an example real quick. If you had an option this morning, right, and you traded with emotion, okay? So you're watching your option. It starts out, you paid $1 for it. It starts out this morning. It opens at 70 cents. It expires today. You're getting nervous. You're down 30%. It quickly moves up to $1.20. So from being down 30%, you're now up 20%. Point is, if you didn't plan ahead, if you didn't trade without emotion, you're still in the position. Now it dips a little, and you're saying, okay, shit, let me put in the order for $110. So you put the order for $110, but at the time you're putting it in, which Robinhood tells you or Webull tells you, now it's gone down 6 more cents. So you're like, okay, 99 cents. By the time you're done chasing the stock, the option price down, whatever it is, you're at like 70 cents where you started. Now you're thinking you're missing out on the profits and it's going to spike back up. So now you're holding on to it. And from 70 cents, remember, it expires today. It's now 60 cents, 50 cents, 40 cents, and then Webull or Robinhood or whatever it is sells it for you. So the point is, if you're not planning ahead, right, you're going to get crushed. So if you have an option and you're down 30% at market open, you're like, oh shit, I'll take 10% profit. If you had took 10% profit, you would have got out at $1.10. And that's my point. You wouldn't have got $1.20, but you would have secured 10% profit instead of being down 30%. Because you did not, you were watching with your eyes, right? You were watching, and then as it was going down, you were trying to sell. And by the time you figured it out, you're already at your break-even point, and you're like, shit, I might as well hold it. And it was a bad decision because it went down further today because the market's got shit on. All right, so you go from $1.10 to 30 cents. Now, what is that? That's 72%. So if you invested, let's just say $2,000 in that, you just lost $1,400. Now, if you do that with other positions and you're watching and you have 4 positions, now you're talking about like $7,000 to $8,000 just by watching and not planning ahead. So if you get something, we trade without emotion. All right, we put in our trades for a simple reason. We believe the market will correct itself. I believe the UVXY will go down. That is why I bought puts. All right, if you believe something else, and I gave an alert for EVGO, and the person that somebody on my platform went the other way, Brian, he said, I'm buying puts instead because he thought the market would throw up. Well, Brian is up 20% right now, okay? He obviously got someone to scare sell to him, so he got a good price because I think I'm only down 15%. Okay, so he could be up 20%, I could be down 15%. I didn't actually check the stock, so I will if someone cares. Okay, point is, if you don't sell, if you don't plan ahead, you can go from plus 10% to minus 70%. Okay, with STX, and I mentioned this yesterday, Taiwan Semiconductor came out with bad earnings before the market yesterday, sold my positions as the market opened. I planned ahead. If you didn't and you got caught in STX, understand, I mentioned yesterday that somebody bought sweeps, which means put sweeps, which means they think Taiwan Semiconductor is going down to like 106. It's at 115 now. So they're thinking it's going to lose 10 more percent. Somebody with space options bought puts. They think it's going down another 23%. Okay, so there's a lot of negative sentiment in the market. Now, why do I care? Because I have UVXY puts, and I think the market's going to stabilize. I'm just telling you, there are different sides. Let's bring up Coinbase. I mentioned I was going to get into Coinbase this morning, options, right? It spiked and then it retracted. Now, what happened in the dark pools? I told my private Twitter people on my platform what happened. I think I even went public with this as well. Somebody was buying 2,500 share lots up of Coinbase, and they were paying, the stock was $125. They were paying 129, 130, 130 and a half, 129.89. I mean, they were just buying them up. They must have bought 50,000 shares in the dark pool. Now, somebody will say, why would they use the dark pool? Because if they bought them on the open market and they're buying 50,000 shares in allotments of 2,500 shares at a time, it would push Coinbase up. It would alert so many of these traders that have this software that somebody's interested in Coinbase. But I mean, along the same lines, so many people use dark pools now. Now, why I have an interest in dark pools, if I have an interest in a specific stock, I will reach out to my buddies on Wall Street because I don't have the dark pool software. I think Unusual Whales, I think he has software like that he tweets about when he sees large activities. He's a great guy to follow. Personally, I don't. Now, here's the other thing. Let's go on to it. My teachings, to leave emotion out of it. So how do we trade, all right? We trade with math. We're not using supercomputers or anything like that. We're using calculators. We're using our phone. In my options video, I explain how you use delta, right, the Greek, to calculate your options price. So if you think the stock is going to drop 50 cents and you want to get in the best price, you use the delta, you multiply it, you say, assume the stock's going down by 50 cents. Your options should go down by 30 cents or 35 cents. You put in your bid cheap, and when it's going down, somebody scare sells it. They're like, oh, I can't take it anymore. I'm just going to have a heart attack and faint. All right, anyway, so let's get into the market, okay? Because what I mentioned pre-market, and I tweeted this out publicly in my video and privately, is I expected the market to open, us to get a quick spike, and I said to everybody, plan ahead, sell on the spike. Now, it didn't mean that I thought it was going down as hard as it was, because if I thought that, I would have entered into put contracts, and I would have told everybody, it didn't matter what stock you played. If you had put contracts today, you obviously made money. So I didn't, because I like to call the bottom. I like to call the bottom market, and today doesn't work for somebody like me. When you think you called the bottom and you miss because it drops harder, you look foolish. So I admit it right now. UVXY spiked. I didn't think it would. I think it'd be down at 27.60 at the end of the day. Now, here's the good thing. If I'm correct about the market on Monday or Tuesday and it doesn't throw up on itself, but you see a gain of 150 points, 180 points for one of them between the 2 days. Guess where the UVXY is going down? By 10%. So if it's at $29 flat, which I don't think it is, I think it's $29.40. So take away $2.94 or $3. So you're at like $26.94 or something like that, $26.40. The point is, it could easily hit $26 and slight change early next week, Monday, Tuesday, okay? Again, nothing goes straight down. So if you see it spike down and then pop up, if you get scared, you're going to sell. That's what the institutions have you do. Now, who's claiming your options when you sell? They are. They're smarter. All right. So understand the goal of me being on YouTube. The goal of my platform is not to give you alerts. I give out alerts of stocks that I think are turning around, of positions that I think will be good. Going forward, we're going to minimize those, okay? So I'm going to keep it to 1, 2, 3 alerts a week. I'm going to make sure everybody knows what they're doing. It's a call or a put. After we buy it, let's say we buy it at $2, we say to ourselves, okay, we're going to average down. If it goes to 120, we'll average down as long as we have enough time. And since they're going to be August 20th calls, we'll have plenty of time. If not, we're going to say to ourselves, okay, if it spikes to $2.90 or $3, we're going to be out with 45 or 50% profit. So we always have two strategies, okay? Now, I tell you, when we're averaging down, we don't want to fall on a knife. So if we enter into something and it happens to drop 40%, wait, okay? Wait. As I mentioned with STX, they got upgrades, but the price targets were raised from 75 to 80. They weren't where I thought they'd be. Then somebody went south on the Dow and south on Taiwan Semiconductor. So I'm cautious about STX, okay? I have no open positions other than stock. I am still holding my stock. All right, so we'll see how that goes. But my goal here is to improve your efficiency. My goal on my platform is to help you be a better trader. It's not to give you and say, hey, John, you missed getting in this stock or whatever it is. I'm trading through transparency. I share my trades as best as possible. When I enter into something, when I exit out of something. Now, other than my transparent trades, if you're new to my platform, when I give an alert, it has a little hashtag. It says alert. I could be in the position myself. I could be down 20%, and I give it as alert then because I already tested the waters. I tested the waters. I took the bullet, and I'm telling you, hey, I thought it was bottom before, but it looks like bottom now. It's definitely a good time to get in. Why? Because it's limited risk and maximum reward. If I already think I have a good ratio, risk reward, and I get in and I'm down 20% or 18% or 14% or whatever it is, I still think I have a good risk reward ratio. I'm thinking I'm going to make probably 40 to 50% on these UVXY options. Now, if I was pessimist on the market, when I sold my positions this morning, I really should have bought UVXY calls. I mean, that was the thing to do. Or I could have bought SQQQ calls or SDOW calls or something like that. But I was hoping the worst was over. So I was looking for the bottom. And again, I like when the market rebounds. And I know the market's going to rebound. It's completely oversold. There are so many stocks that I could go ahead and mention that I believe are oversold. But let's go on to, I don't know. Let's go into some slides, I guess. If you like what I'm saying and you're getting value in what I'm saying and you believe what I'm saying, please give me a like, give me a dislike. It doesn't matter. It adds to the algorithm, shows my videos to more people, which is what I want. I want more people to learn. All right. I want more people. There are 30 to 50 million new traders within the last year. I want them to have a leg up on Wall Street instead of going in blindly and saying, my friend said this, they buy it. And when it goes down, they just get intimidated by the market and they sell and they leave forever. All right. 30 million to 50 million in. If 20 million leave, then the institutions win. Okay, so I mentioned pre-market. I would be tweeting publicly today so you guys can see how I handle my platform. So if you missed it, you can go back and look at all the tweets and the videos and the broadcasts, and you can be like, okay, so this is what I get on a daily basis. I try and guide the market. So again, let's go to the next slide. All right, so expectations. This is what I tweeted earlier this morning. At opens, I think it's going to be a quick, harder spike than futures show, and then there's going to be a dip or a scare as institutions will try and manipulate the market. Okay, I thought it would be short-lived. I was incorrect. But the point is, we're looking for the bottom. So as shit's going down, as it's going down, I don't think I thought I saw the bottom until about 2 o'clock. And again, I told you the institutions fooled me. They get me every once in a while. All right, next slide, please. Yeah, because no one's perfect. Okay, so this is pre-market again. This one I only sent out privately. I wanted the family to know that I have a gut feeling that crypto might surge this weekend. So now everybody knows that I think crypto might surge this weekend. All right, so I'm going with coin options. Now, coin options or coin did spike, okay? I did not sell because I'm holding for the weekend. That's the whole point. So it spiked like $6 or $7, and then it went down, and maybe it closed flat. I probably think it closed flat. All right, what else did I mention? I just gave you guys some news. Biden was saying he sanctioned 7 Chinese officials. China was saying they're going to retaliate to U.S. companies by going into these companies and seizing data or by disciplining these companies. So it's not a good thing for U.S. companies in China. It's definitely a breakup there. Okay, let's go on to the next slide, please. All right, this dude. I teach you, yes, about plays. Everybody that hasn't blown up their account, it happens. I blew up an options trading account of mine 3 times last year. I took 2,000 into 60,000. I blew it up in the second quarter overnight on Netflix earnings. I blew it up on the third quarter when AMD acquired another company at the same time they were reporting earnings. So I held twice through earnings, and that just sucked. 2,000 to 60,000 back to like 4,000. I did it again. So it happens. And I think I'm really good at options, but that's why only 1% of my account is in options. Okay. So, so you know the game plan. Anyway, we know what to do. There are rules and lessons, and if you abide by them, okay? Let's go off here real quick just so I can tell you guys the lessons and rules, and then I will go back to the slides real quick. So the rules and lessons, okay? First, we don't buy options before 10:30 a.m., right? For anybody new, that is when the spreads narrow. So when you're buying an option at market open at like 9:40 a.m., the bid will be 87 cents. The ask will be $1.50. The middle price will be like $1.20. You'll say, okay, $1.20 is good, okay? Then when the bids narrow, the bid is still 87 cents, and the ask is now 89 cents. So you paid $1.20, the stock hasn't moved, and you're down like 30%, and you can't figure it out. Okay, so that's lesson number 1. We don't buy options before 10:30 a.m. Next, if we're buying call options, we're looking for the biggest dip. So as we're looking for the biggest dip, now remember, with stocks, they tend to double dip. So if you hit the bottom of something and it bounces up and you're like, okay, I think that might be the bottom, you look at the lowest price somebody paid for options, for that option, whatever one you're looking at, and you're like, okay, someone paid $200. Great. I will put in for $195. That way, if it dips to that point again and it looks like it's dipping harder, somebody will scare sell. But usually there are double bottoms or triple bottoms. Same way there are triple tops. If you miss selling and you miss the spike, you look at what the max price somebody paid for your option. You're like, okay, I was trying to get $3, but somebody paid $2.90. So if it spikes up there again, I'll put my bid in for like $2.88. That way, if it gets there, somebody will buy it. All right. So hopefully you guys understand planning ahead and the lessons. That's what the platform's about. It's about making you a more efficient trader, all right? I have different YouTube videos. I think 42 or 47, I spoke about my spreadsheet. 37, I spoke about averaging down. One of my favorites, if you're just in stock and you want to get involved with options, watch episode 14. You're in a shitty stock position. You're down 40%. All right, stop that. Let's get those slides back on if we can, please. All right. Let's go to the next slide. All right, so this dude, I guess he was using dictation because his platform, which is my platform, I saved his ass multiple times in positions you made over 100% on UVXY, eBay, Airbnb. Yeah, so we saw eBay again this morning. So what does eBay do? It spikes on open, it dips hard, it spikes again, it dips again. So you could be in eBay any given day, all right? Any given day, and I have no current positions in eBay, except for maybe some stock that I'm selling at $77, should it ever get there. But any given day, when eBay dips, you buy a call option. Just buy one. It doesn't matter. When it goes up 50 cents, you look for like a 20 or 30% profit. Boom, you're out. That's it. So, yeah, I appreciate that. Rules make you better, okay? They do. When you break the rules, you feel the pain. All right, next slide, please. Okay, so I was explaining, now this is the third day straight, but somebody asked me about this, okay? This person's investment made zero money. They lost money. It wasn't me. It wasn't a family member, a 349 platform member. But what it was is somebody yesterday bought a bearish sweep call. Now, what you look at first is the fact that it's a call. It means they think this stock is going up. Their price target was $6.65. I don't even think Tesla got close there today. I think they paid, I guess, 60 cents, but I guess the lowest they paid was $87 per contract, which means they bought, 6,000 contracts or something like that, 5,000 contracts. So they put in a $30,000 wager, or maybe it was a $300,000 wager. That makes more sense. Point was, they lost. It happens. So when people say, oh, well, this happened, or this bull or whale is doing this, it doesn't mean they always make money. They have a theory. Their theory was Futures were going to be up today, and the market was going to spike in a good way. And if that happened and Tesla moved 4% to the upside, this person would have made 500%. So his risk was 100%, which he lost, and his reward was 500%. So his ratio was 5 to 1. That's what I tell you guys. Always have a positive ratio of 2 to 1 or better, meaning you figure out how much money you could potentially make in the trade if you are correct. If you're going for 20%, then that's fine. Then know your limited downside is going to be 10%, and you better set a stop loss. If you only want to make 20%, you better set a stop loss at 10%. Next slide, please. And then we're going to get to questions after the slides. All right. This is my alert, okay? I think it's off 15 cents, and I know people got in. I heard someone say $1.75, but he might have been talking about something else. So I know people got in cheaper than me. Again, I like the chart for EVGO, okay? They just entered into a deal with GM. Understand, everything in the market was red today. Let me confirm that real quick. Let's go look at the market real quick. And I like these updates. So was everything red? Almost 2.8 to 1. So almost 3 to 1 stocks were red today. Now, which stocks weren't red? I'm assuming the bigger players. I'm assuming there were some biotech companies. I don't need to go through that right now. Let's go into another slide, please. All right, UVXY puts. This is the position I sold at market, not open. It was probably like 10 or 20 minutes in, okay? I had 228 contracts. I actually have a couple more contracts than that right now. I'm carrying over like 311, I think, 314. Anyway, this morning I sold these. It spiked. I got $2.05 per contract. They were $1.68. I closed yesterday. I was in at $1.44. So you secure profit. Did I think the UVXY was going down? Yes, I thought it was going down to $26. But this was a lot of money, and this is my UVXY money. I put the same amount of money in UVXY. If UVXY screws me, my UVXY money will go back down. All right, but you keep your money segmented. Certain parts of my account are for UVXY. Certain parts of my account were for XTX. Right now, that money's on the side because I have no position in STX. All right, all right, next slide, please. UVXY. Okay, so this is when I had FOMO. I bought the $28 puts. My first price was $214. Then I paid $205. I bet they're going for $28 puts. I think they're going for like $1.45 probably right now. So yeah, this position. And again, when I made my first purchase and second purchase, it was 12 contracts followed by 18 contracts. When I went all in, not all in, because you guys go crazy and someone say he went all in on UVXY, he lost all his money. No, when I went all in with my UVXY money, that was $35,000 after I sold my position this morning, which was $24,000 last week. So yes, I'm up $11,000 on it. But yes, all $35,000 is currently in UVXY puts, and it's currently not worth $35,000. It's probably worth about 26.5. Okay, next slide, please. I still love that position. So that's the whole thing. So I love that position. I'm not worried about this weekend. Now, if I wake up Monday morning, okay, and I won't look at futures yet, but let's say I look at 6 a.m. and the Dow futures are off 279 and tech futures are also off. Now, I don't mind if one is positive and one is negative. The Dow's up 50, tech's off 40. I'm okay with that. Actually, I'd probably rather it the other way around. I'd rather tech up 50, Dow off 40 or something like that. Because if the Dow's up, we already know they like to sell off the Dow. So if the Dow starts higher and tech starts lower and they sell off the Dow, then both could go lower. And that'll make the UVXY spike and keep it over $29. I will not be buying more positions. I am happy where I am. I have 5 days till expiration. Now, would I ever think about averaging down on UVXY? Okay, if the market threw up on itself Monday, Tuesday, Wednesday, okay? And we say the UVXY is at like $31.50. It would probably even have to be higher. Let's say it's $32. Obviously, those positions are, I would cut my losses. I would lose probably like 70%. Again, I'm planning ahead. If I were to lose 70%, I would have to bring more money in from a side account because I want my UVX money up, and then I would average out. It would be a longer-term investment. I probably would actually, if I got crushed next week by UVXY, I would not go out to July 30th. Instead, I would go out one more week to August like 6th or 7th or whatever that is. Okay, again, psychology. If the markets throw up next week, actually, I probably would just go out 1 week. I don't go out longer for UVXY. I tell you guys not to. I say 5 days is enough. If we had 3 more days this week, if today was Wednesday, I would actually have just bought contracts that expire this Friday. I think 3 days is more than enough for the UVXY to go down. So if it's Wednesday of next week and the UVXY is like $29.20, then yeah, that would be a little scary. I'd still hold my position because I know one calm day in the market, it's 10% to the downside. That's what it is. So when I'm putting in, I'm like 12, 18 contracts, 22 contracts, because I split it up as I'm buying. Now, when I think I saw the top and I tweeted about it, it was what, 28. I was wrong. It was 28.98 and then 28.96. And I said, boom, I just went all in and it spiked. And that's why I'm down 22%. Plain and simple right there, because I thought $29 was the top. Okay. I was surprised. Let's remember it was at $27.50. It even turned red at some point during the day. So it isn't that far-fetched. Again, the markets threw up on itself. I don't expect that early next week. Why? Again, if the markets were really going to throw up on itself and you're sitting at a bank with 300,000 shares of whatever, and you sell something off, you're not just going to sell your 300,000 shares of Carnival, Disney. There must be so much money on the sidelines right now. I mean, just a ridiculous amount. Volume was pretty decent today. Volume was more decent after 2 o'clock. So that tells me there was a battle. So again, let me just see where the markets went at that time. Let's go for, I wish I had this open. All right, here we go. Dow, here we go. All right, so, okay, well, yeah, they fell, it fell about 40 points. So yeah, the Dow fell about 40 extra points. The NASDAQ fell about 45 extra points when I was calculating it. I expected the Dow to be 40 points higher at close, the NASDAQ 45 to 50 points higher at close. So yeah, I'm curious to see what Monday brings. Again, I did this one day a long time ago where I was like, the market threw up itself. I think it was a Friday too, because everybody was worried. And I said to you guys, I'm a contrarian. I know things look the worst right now, and the market looks like it took a shit on itself. But I see certain things out there that make me think otherwise. Okay, I remember saying this to you guys, and I remember it was a Friday, and it was the weekend. Oh, yeah, and then the UVXY went down on Monday, and we all sold and took profit. And then I said, how stupid of us, because we actually got in worse positions last time. We were down like 40, 50%, or in fact, we were down like 60%, and we took our profit on Monday. We were so glad to be out of it. So if the UVXY goes down on Monday, yes, I will secure some profit, but I will let some carry over as well. Okay? Next question, comment, please. And yes, when I buy UVXY, I have FOMO. I mean, there's no doubt about it. I think I'm calling the top, and I go in. Now, I don't go in with like 200 contracts at a time. I buy 24, I buy 18, I buy 36. It moves, and I decide. Now, I don't chase. So that's the thing. Well, that's just why I got all my contracts executed today, because I think the UVXY finished at the highest point. So all my orders got executed by the end of the day. But there are different price points. The most important is, I guess you could say, it's dollar cost averaging, which means you're buying here, and as it's going down, you're buying here. So you're in at, $1.81. The alert I give out, $1.81. It's $1.45 now. So yeah, I mean, right, $1.45, $1.81, 36 cents. Yeah, so I mean, it's about 19%. Okay, I don't understand how Snap had higher inflow all day and it tended down. Okay, easy. The market was shitting on itself. People were eager to sell their stock, so they were selling to the bid price. So the Snap ask was like, let's say $59.50, and the bid was $59. Instead of the guy taking his ask, he was giving it to you at 59 and then at 58, and then someone said, I'll pay 57, 57, here's more at 57. So there's more inflow because somebody's acquiring stock, but they're not paying the ask. They're letting their bid get hit right and left. So that's the good thing. If Snap volume and it was higher today, and let me look at Snap, because if volume was higher today and you're telling me inflow is good, then yes, it's setting up good for Snap. Now, there were puts that were sold on Snap. Let's see where the volume was. 22.5 million, and it usually does 19 million. That's actually pretty substantial. Let's see. It finished, yeah. So I remember Snap was struggling. Now, the market was struggling. Snap was at 58.85. The market was struggling, okay? And what happened is Snap is one of my trackers that I use because I was just in it, so I still have it towards the top of my watch list. And it moved past 59, and I'm like, okay, but the market looks like it just threw up again, so Snap should go down to 58.85 again. But instead of going down, it still went up, which means people were buying certain stocks at the end of the day, which is the sign that I was looking for. There are a bunch of stocks. There's, what was that one? We used to be in it. Cleveland Cliffs, also on my watch list. It was off 9% with not too much time left. It finished off 7%, and I think after hours, which I don't give a shit about, I think it might be up, a fraction of a percent. The point was 9.5% was its worst. It finished down 7.5%, but that's 2% reversal, which is something substantial. If you put 2 over 9, that's 22%, okay? So think of it that way. Think of it like 1/5. If a team is down 10 points and they just shave 2 points off that lead, okay? They're still down 8 points. They shave 2 points off. Similar thing. Okay, next one. You're hoping to sell on a spike Monday. Yeah, plan ahead. So, okay, here's the thing about planning ahead. You don't have to always plan ahead for profit. Say you're negative on your snap and you're down 60% and you say to yourself, okay, my options are worth 60 cents now. I would gladly sell them for $1, although I paid $1.10. So I paid $1.10. They're worth 50 cents now. 50 cents would market. I'd gladly sell them for $1 if it spikes to $1. You don't always have to get what you paid for it and try and be green. You can say, okay, if it spikes, I think it's going to go up here, and then you plan accordingly. I'm not telling you to sell Snap for less than you paid for it. What I'm saying is plan accordingly. Assume whatever the spike is. Whatever the spike was this morning at open, assume the same thing for Monday. In fact, let me help you so I can get more accurate with these predictions. Okay, so it spiked to $62, I guess, $62.26, and it was basically, so it spiked probably 2.5%. So if I'm planning ahead and I own Snap options, I'm going to plan for a 2.5% spike on Monday at open or sometime in the morning, and I'm going to figure out what my option is worth based on the delta. So I say if the stock goes up $1.50, right, and my delta is 0.8, I would multiply 0.8 times $1.50 and think my option is going up by $1.20. Then I say, okay, my option is $1.20 right now. It's going up by $1.20. I will set my ask at $2.40. That way, if I'm right and it spikes 2.5%, boom, you're out with what we call max profit. All right, POWW. I don't know that stock. POWW. All right, ammo. Okay, I do know the stock actually. All right, so we'll look at ammo. What's your question about it? Ammo is consolidating nicely. It's in the buy range for these looking for cheaper stocks. My buy orders are set for $6.95 to $5.50. Okay, yeah, I mean, it's consolidating, but there's been such light volume. So if you think the market is going to turn around like I do next week, and I don't mean it's going to be green and like trees are growing and shit like that. I mean, they're going to be decent days. It's not going to be like, okay, Monday, Dow's down 280, NASDAQ's down 150. Okay, Tuesday, Dow's down 220, NASDAQ's down 110. I don't think it's going to be like that. Again, we know the market, it goes up and down and up and down. What we have to do, unless we're in a bullish trend or a severe bearish trend where you think the market's throwing up and it's giving back its 20%. If that happens, we flip the switch and basically any puts you want. If the market loses 10, 12, 13%, okay, you see a day like this happening on Monday, you can flip all your positions, okay? If I saw a day like today happening on Monday, I don't want to say I'd flip all my positions because it'd be UVXY and I'd have to say it was going to spike. But if I saw a day like, I don't know, we'd have to do like that. Okay, next. Let's go on to another question. All right. Oh, sorry. So I didn't answer. So the point is there's extremely low volume. You had 1.67 million. If you go back to the 25th or even the 30th of June, you probably had about 10 or 12 million that day, maybe 15 million on the 30th of June, and both were inflows. So somebody is buying into ammo. But again, I'm not saying it's the bottom. Your stock looks very similar to a lot of other Dow stocks and like return to like I'm going Bass Pro Shop fishing or something like that. I'm sure ammo has to do with ammunition, or maybe it doesn't. It's a NASDAQ stock. Point is, let me look at the 3-month. Yeah, I mean, it could be bottoming. The problem is it could bottom all the way to 550. You're right, which is another 20% downside. So we'll have to look what's going on in the market. Okay, what's with Apple and Delta? All right, so Apple hit an all-time high at 149. So what you saw is profit taking. In fact, one of the platform members who I was talking to said to me, yo, I held that Apple and he made, I think I have the slide or I showed it yesterday. He made like 360 something percent. The point is that doesn't happen. So you're telling me that Apple spiked pretty hard and people are just safeguarding themselves. They're selling off. Imagine you had Apple at 135 last week and you're an institution and you got to sell it at 149. You made 11% in a stock, not options, in 1 week. Understand, there are 26 weeks to a year. When you try and return money for a hedge fund, for a bank or something like that, if you get anything north of like 70% for the year and you're a trader, you're on fire. So the fact that you made 11% on one trade is like astronomical, okay? So what did it pull back? It's been selling for 3 out of 4 days, but the market's been beat up, or actually 3 out of 5, sorry. But the last 2 days, it's been consolidating. Apple's going to push higher. Apple's going to push, I think I would put a price target of like 175, 180 on Apple. And I would say that probably by like October, November. Apple's definitely going to push higher. All right, another question. So let's look at Delta. So yeah, no, I don't even need to look at Delta. I can see Delta's at like $40 and change. Delta, Carnival. I came on here 2 days ago and I mentioned Dow stocks were going to continue to be beat up for the last 2 days of this week. And if you can't handle it, make sure you get out of the market on Thursday morning with Delta and Carnival. Okay. I said they'd be beat up. Now, why didn't I get out? Because my Delta option expires in September. My Carnival options expire in October. Okay. I'm going to look. I mean, here's what's going to happen. Okay. These stocks might continue to struggle. I think Carnival is like $19, $20. Delta's at what, like $40. Point is, they could struggle $1 or $2 more. But what's going to happen one day when they decide COVID's gone and we're not worried about the Delta variant anymore and there are return to society plays and someone comes out with decent earnings, Carnival, Delta, Norwegian. Oh, somebody just went long hard on Norwegian right before the close of the market. There was crazy call action on Norwegian cruise lines. So I would look at that NLCL or something like that, Norwegian cruise lines. Anyway, so yeah, what's going to happen to these stocks is one day they're going to go up 5%. Another day they're going to go up 4% behind it. I'm not saying it's happening next week. It might not happen until August 1st. It might not happen until August 21st. The point is it's going to go up 5%, 5%, 4%, 8%. When you look at it and the stock is up 22% or something like that, 10 points, and it's gradual the other times. So you got another 4 or 5 or 6 points. Let's say 15, and you're at 40. Boom, you're at 55. So yes, my prediction might be short of 62. But if Delta's at 55 and my options are at 42, and I think I'm in with a $3 average, which means I need 45 for a break-even point, I'm looking for anything greater than 45. So yes, if you're in the same options and your options expire in September, you either have to zoom out or you decide that Delta's going down more and you're going to save some money. And you say, I'll sell my option at $3 on Monday. And when Delta goes down $2 more, I will buy back the same call option for $1.60 2 days later. And you'll save 40% or whatever the number is. I'm just giving you a guess estimate, but that's what you do. If you're scared about something, I don't care. I'm not controlling your stock picks or anything like that. I'm telling you, I don't control the market. I plan accordingly to what I perceive the market to be doing. Okay. So if I didn't think the market was oversold and I said, oh shit, the market could go down. First off, we would have been in puts earlier than today. We probably would have been in them last week. So the market has surprised me, okay? Because we're so close to the all-time highs, and I know what markets do in all-time highs. Now, it's pretty messed up with the COVID virus getting outbreak and getting worse and shit like that, but it hasn't changed people's habits. It hasn't changed people's cruise habits or flying habits. In fact, the TSA numbers go up and up every day. All right, let's get another question. Hopefully I answered that for you, man. All right, price targets on UVXY puts next week. Okay, so in all honesty, let's just say the market remains somewhat stable the entire week. So you start here, you end here. If there is stability in the market, the UVXY will go down 10% by the end of the week. Now, I'm going to look for stability or a green day sooner than that. So if I think my UVXY puts are spiking, I will sell. Now, if that happens on Monday, because nothing goes straight down or straight up. So let's say the UVXY starts out on Monday and it's down 3.5% pre-market. I'm going to assume it's going down probably 7 or 8% that day. So if I get a bump to 6, I might sell even though I said it was going down 7 or 8%. But if it goes down 5 or 6% like that, I will sell. And then if it spikes back up to only down 2%, I will buy the same position again because I just saved 3%. And if you save 3%, with your options, then you're going to save about 28 to 30%. So, I mean, if I could save, 8, 9, I'm going to save it. I'm just going to save the money. So anyway, yes, I think the UVXY is going down. I explained my rationale, my reasoning. If not, why wouldn't the market have had a day where they just had crazy selling? I mean, whatever happened, whoever was selling today, and again, I think it was retail traders because I think institutions were buying, especially talking to my buddies on Wall Street. I mean, they had the same consensus. They're like, dude, we don't look at tomorrow. I'm like, I know. When are you guys going to sell? And they're like, we hold till quarter 3 and we have to report on our books or we change. I understand all this. So hopefully you guys do. Let's get another question, please. All right, Matt, 3 things. All right, thoughts on bad news out, inflation, Delta and China issues and more. Also thoughts on Oracle, $88 puts. Okay, I'm curious to see the Oracle stock because Oracle stock looked like a hell of a good chart last week. So if Oracle's off, I mean, that's just telling you. You know what? Today was an inflow day. So, I mean, how amazing that. No, I would not think about Oracle puts. Oracle stock is really, really strong. If you look back to the beginning of July, where it was $78, and again, we're over 11% higher. We're almost 12% in the last week. Oracle's higher. There was demand today. The market was shitting on itself, and there was demand. Now, there was somebody after hours that's putting up a bit of a wall at 87.90. But that person's just looking to get out of their shares. If you want to buy their shares after hours, he's saying you can buy it for 87.90. He's not a short. If there was a short, it'd be pushing the market down. Again, stock was up 1.25. I wouldn't buy puts. I would look for something safer. BABA long term, let me look at that, and then I'll give you maybe one or two other comments. I really don't have an opinion on China. I mean, China-U.S. relations were never strong. Even when President Trump was there, even before President Trump, we've never had strong relations. China lies about shit, okay? When they announce numbers, earnings, companies lie in China. So, yeah, I mean, there are some companies I obviously invested in, and I feel had, all right? And I almost looked at EH today, which was beat up, and I think it was down 8%. I don't know where that finished up. Chinese companies are very difficult. Even though people like Alibaba, right? It would be tough for me to say yes. There's been 3 straight days of selling for Alibaba after 3 straight days of buying. If Alibaba does go down lower, you know where it's going. It's going to like 204 or 202. If Alibaba goes to 202 or 204, the NASDAQ is getting ripped a new one, okay, or something happened with China. But more likely, the NASDAQ's getting ripped a new one, and I will not be in UVXY puts. If I see something happening and I get scared of my position, I'll suck up the loss, and I will tweet it out as well. So if I have to suck up like a 40% loss because I see the UVXY spiking and I have to give up another 20% on Monday, I will tell you, okay? Because you have 2 options, all right? Now, that's only if I think it's going to get worse and worse and like the whole week we'll have to be throwing up, all right? If I somehow come up with a conclusion based on Monday's action that every day is going to be a throw-up day, Monday, Tuesday, I speak to my buddies. Buddies say, yeah, if I think every day is going to be a throw-up day, I will exit out of my position. I will take a loss, all right? It's better to keep your money inside, and then I'll just flip it. But I don't see that happening, so I can't. I mean, I say that, and I'm like, that's just not going to happen, so it just sounds ridiculous to me. Okay, so Oracle I'd skip. BABA long-term. Long-term, as long as nothing bad happens between the U.S. and China, yes, Alibaba is going to go back up. If the shit happens with China, then all these Chinese stocks are going to go to shit, all right? That's just a simple fact. Okay, Delta variant inflation. I mean, inflation numbers are full of shit. They want it to be at 2%. They're under 130 right now. I think it's even down a little more. It's like 129.4 or something like that. So that's not really telling you. You have to follow the market right now and listen to the Fed. The Fed spoke today. Biden spoke today. The Fed spoke earlier in the week. They're talking about reverse repos still being over 700 billion, I think. So it's pretty substantial. That's why the market is hesitating in mine or consolidating. All right, next question, comment, please. All right, what's the chance of eBay going back to 70? Your calls are getting killed. All right, let's see where your calls are at, man. All right, so I'm going to assume, A, you either have 69. Well, first of all, here's what we do with eBay. And I thought I mentioned that earlier, Ryan. So eBay, if you look at today's chart, it probably spiked pretty good at open, didn't it? So that's what we do. Let me just see. Oh, no, I was wrong. No, wait. eBay's chart looked better and better. It finished up. Oh, it was as high as C. Yeah, okay, so it spiked at open, I guess, but it spiked a couple times. At 11, at 12 it spiked, at 1 it spiked. So if we thought the market was throwing up, which the market was doing, and you got 3 different opportunities to exit out of your position, again, your options expire next week. If you have the $69, let's see what we got here. I'm assuming you're down. Let me just look at the 5-day chart. Instead of looking at the options price, let's look at the 5-day chart. All right, well, eBay was up from yesterday, and there was lows yesterday. So where did you get in? Oh, did you get in on like July 13th or 14th? If you did, then that makes sense that you'd probably be down, plus you're down the IV. So, yeah, I'd be looking for eBay to spike over $70. So I'd be looking at an exit point of like $70.30. So I'm not sure what options you have, but I would plan accordingly on Monday. If it doesn't sell on Monday, I would set up the same scenario for Tuesday. $70.30. That's the spike I would be looking for. So that's how you plan ahead. So if you have the $68 options and I say it's going to spike to $70.30, then you're going to ask $2.30 or maybe $2.35 or maybe $2.40, depending on how many days are left. Okay. If it happens on Monday, I would ask $2.40 if you have $68 calls. If you have $69 calls and it spikes, then I would ask $1.50 on Monday. And as each day, I would take 5 cents less, $1.45, $1.40, $1.35. That would be my plan for the week. If I'm still holding on Thursday, that just means the market threw up on itself because eBay is having a problem. Because eBay is strong. eBay is a beast. eBay to end of the day green. So anybody that was in a stock that was off 4%, 8%, 6%, and your options were down 60, 80, 40%. If you were in eBay options, you probably made 2% today, which is a lot better than losing. All right, let's go to another question comment, please. Oh, okay. So real quick, if you're getting killed in eBay options and your option expires on July 23rd, which is just 1 week away, you don't have enough time. So what I would suggest is whatever money you put in the eBay option, let's say you put into $800 and you're getting crushed, so they're worth 500 now. You're down $300. You want to average down. You put in 800, you double that. So you say 800 and now I'm going to take 1600 and you go out to August 20th and you buy the eBay options. Which ones do you buy? Well, I want you in or at the money. So if it's currently $68, you buy the $68 ones. It's about the amount of money. So you double whatever your initial investment. Okay. Yes, I know Russ and me, we went hard on the puts. UVXY put contracts that expired to the $28, 130, blah, 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 blah. Total invested $50,000. Yes, you're in a little harder than me. I think not by like maybe 10%. I was in for 35 and I went in and pulled another 10 from a different account. And I bought options as it was spiking to, I mentioned, $29. And I know it finished above $29. So, again, we're in good. Now, here's the thing, Russ. Although we want to secure profit, please, let's talk so we can work out a strategy on what makes sense. But I'm not going to know until we get to Monday morning. So, everybody, you enjoy your weekend. Everybody enjoy your weekend. Let's get to another question, man. Now, they don't have to turn very green on Monday. Let's say the market futures are down 20 and 30 points. The UVXY will not be spiking. In fact, it's likely that it would be off maybe like 0.5% or something like that. So the thing that we're rooting against is Dow futures. And again, I don't give a shit what happens Friday night because if you saw the futures last night, okay, the Dow futures and tech futures, which maybe it was a sign or something like that, tech futures were up off 129 points at a single time. And then they rebounded and then they were green in the morning. So, and then, of course, they sold off. So let's look at HT and CLX. So I don't know about Monday. I can look at the chart, Chris, but I can't tell you what's going to happen to it on Monday. I mean, I can tell you if you told me the Dow is going to be green on Monday, then I would tell you Home Depot is going to kick some ass. Oh, Home Depot. The 5-day chart looks pretty damn good. I mean, it's flat over 5 days. It's down 0.25%. So, again, if your stocks are struggling and you're looking for a Dow play and you don't want to be in Carnival or Delta anymore, and I believe Russ exited out of those on Monday because he had enough, or maybe it wasn't Monday or whatever day I said reevaluate your positions. I think he might have gave up on those. Point is, this is a strong Dow stock. So even though the Dow was beat up, this one lost $1 today. But we were talking about it's like 0.33%. I mean, and it was even up at various points today. It was up $5. Yeah, Home Depot looks strong. Again, you're playing with the Dow. So if the Dow is up 180 points, there's no way Home Depot is green on Monday. You're going to see a result just like today. It's off 0.5%, 1/3%. Now, if the Dow is flat, you will see Home Depot will probably jump 1%, something to that extent. Now, if the Dow is green, say the Dow is up 60 or 80 points, Home Depot will likely hit 326, 327. All right, let's look at CLX. That's a good one. I'm going to save Home Depot on my watch list. That's a good idea. I like that idea for stocks. I'm going to look at it more carefully. All right, Clorox. Okay, another decent Dow play. Chris, you're getting very smart, man. The 5-day looks beastly. If you're thinking about entering into these stocks, Home Depot, I can see yes. Clorox just had a pretty substantial spike. So I'm not sure if there was news that came out, but they spiked. Oh, it was today it spiked 2.5%, up $5. Now it looks like it did sell off. No, not really. I guess it's selling off after hours. That's probably what I'm seeing. I wouldn't worry about after hours. And if you can trade after hours and you want to get in, it's not even off that much. It's off like, what, $1 or something like that. It was spiked. Okay. Yeah, I wouldn't enter Clorox at that point. I like Home Depot better. Next question, please. All right, Caroline, Matt, please explain what I think the market will be better next week. Q consecutive down days since S&P and Dow topped their all-time highs. Okay, you said the key word right there. All-time highs. Now remember, stocks don't only go up. If stocks only go up, we'd all know what to do. We would buy and hold. However, when stocks go up, there has to be profit taking. Now, what I call is consolidation. So they look for any reason. Did it have to consolidate more today? No, futures were green, but they're looking for something. Politicians came out. They were talking about COVID, the Delta. Biden spoke. I mean, it was a number of things. Inflation fears are still there, even though we're seeing somewhat of deflation. And then people are taking profits. And then I mentioned to you guys that volume in the market is extremely light. So if it's a bullish day, expect like fireworks and shit like that to go off. If it's a hard day, God, I wish I thought of that earlier. If it's a hard day, it's probably going to close at its worst, at its lowest level. And if I had just thought of that simple rationale, then I would have saved all my purchases today. In fact, you guys wouldn't have heard from me all day. I would have sold on the open like I did, and I tweeted about it. And then I would have said to you guys, it's probably going to get worse all day, and it'll be at its worst at 3:59. But I wasn't thinking that. I actually saw the market turn around. So again, if I zoomed out, better. Zoom in, not so good. So when I tell you to zoom out, and especially with UVXY, just zoom out. Don't even worry about after hours. I wouldn't worry about what you see until Monday morning. If you're seeing it at like 7:30 and it's spiking 5%, yes, I would be a little concerned, and we'll talk about that if it happens. All right. Other than that, if it's down 2.5%, I think we're good. So yeah, markets are green, heavy selling, profit taking. A lot of these institutional guys are gone for the summer. So I heard them joke on CNBC today, and they were like, yeah, we could probably talk about that because no one's here. They're all at their houses in the Hamptons or Montauk or New Hampshire or Maine or whatever. I mean, these are people that make mega bucks, and they don't give a shit right now. They don't trade during the summer. They go away, especially with COVID spiking in different states. They're at their country houses. So that is kind of what I thought. I think people might have took off for an early weekend. I think, again, it was the retail sellers that forced the market down today. So the guy mentioned Snap before, and inflow was greater than outflow because institutions were gobbling that up. Now, I don't know if institutions are going to hold Snap through earnings, okay? It really depends. But they will hold Snap at least prior to earnings. Okay, good question. Next question, please. Oh, by the way, hit the like button if you're getting any value. If you think I'm an ass, hit the don't like button. I don't care. 6 of you do it, which means 3 of you who used to give me thumbs down now have twin brothers. So I welcome you, and I thank you for watching the video. And even if you give me thumbs down, it helps analytics. And even if you don't like me and you think I have an attitude or something like that, I appreciate you watching my videos because I think you're learning. And maybe you don't have the light bulb moment today, and you're like, that dude is a dick. And 2 months from now, you do something and you execute because you planned ahead. And then you go, you know what? I've started planning ahead. I'm making money. It's changing the way I'm thinking. I spoke to somebody today that had a $100,000 account, okay? And I told him most of your money should be on the side. Oh, no, this is a key point. 100,000. I explained to him, if he goes into a position, he buys in for like 3,000, okay? If he buys in again, he buys in for 3,000. If he has to go a third time to average down, he's in for another 5,000. That would be $10,000, which is 1/10 of his entire portfolio. So if a specific position blows up, boom, 10%, okay, you move on. If you over leverage yourself and you see other people doing this, or you just keep doing the same thing or chasing a bad stock or a bad position and you over leverage yourself and you're incorrect, you'll blow up your account. And you'll start over and you'll realize I broke the rules. Other ways to blow up your account. Throwing good money after bad. I'm sorry for you, Wesley. You're going to have to hold on a second. Throwing good money after bad, okay? Averaging down too soon. Buying a contract before 10:30 a.m., even if you think you're getting a discount. Because let's remember when I bought Plug 2 Fridays ago. I bought Plug. I went on pre-market. I tweeted. I said, any 4-letter stocks going down, the Nasdaq's going to be beat up today. And then I put in a cheap bid on Plug. I got it at 9:30. I bought more at 9:39. I bought more at 9:59. I bought more at 10:14. By 10:30 in the morning, I was down $7,500, and I had over 188 contracts, I think, of Plug. Now, I was right about Monday. Plug spiked that Monday. I think it spiked like 8%. And then the next day, it spiked 5%. And I got out at 72% profit. However, if I had entered into it at 3 p.m. that day and got in cheaper, I would have made over 160% profit. That's how bad it was that I had to average down. I wouldn't have had that many contracts. Okay, you keep buying Carnival January 2020, $30 options. Done move or good move. Okay. Both, okay? It is a good move because I like the leap years, and I also think Carnival will be way above 30. So it's a good move in that aspect. It is a dumb move because I would rather you pay the extra, I'm assuming it's an extra $2 or $3, and I will look so I can be exactly right or else it wouldn't be fair. I could say something that's completely wrong, and that wouldn't make sense. So let's look at Carnival options. And I happen to think Carnival is going to spike next week because I think all that put sweep, the guy had to keep it under 23. He kept it as close to 21 as possible. It's under 21 right now. It's 20.97. So I would not be surprised if Carnival spikes back to $22 next week. Now, it's still $2 under where I last doubled down on my Carnival position at $24. Yes, I'm transparent, but I have not averaged down again. So I have what I consider as 2 large positions in Carnival. But if I need be, I will double down. Okay, I don't think I have to. I'm looking for Carnival to pop. And even though I missed calling the bottom by, I guess, 40% now, right? Well, 20% right now. I think it'll be okay. So let's look at your $30 options. Here we go. $30. All right, you paid 79 cents. Oh, wow, that's really cheap. All right, I would have rather had you buy the $20 options and pay 4 or 5 times that we would have bought it for like $335, $340. I'd rather you do that. That way, worst case, I mean, I can't imagine Carnival not at like $45 by then. I mean, it would just be absurd. I'm going to look into buying these for my long-term account. I can't believe they're that cheap, the January ones. Wow, it's a surprise. Okay, so yeah, I would rather you buy more in the money, but yeah, you're not wasting that much money because you bought them for like 87 cents each. Let's say you bought 5, you're in for $435. It's a long time hold. Now, if you're right about Carnival and I'm right about Carnival and it goes to $45, let's just say $50 for the shit of it, and we'll also say $45. $50. Each option will be worth $2,000. So if you have 4 options, you'd be worth $8,000. So yeah, that's a hell of an investment. And if you're wrong about it, let's say Carnival's $32, okay? You're still going to make over 100%. So they really don't like Carnival. I can't imagine that. Either that or people just are such, maybe it's institutions. I mean, there's been massive selling, yes, since they announced their earnings on $25. I mean, yeah, I'm surprised at Carnival. That's a good deal. All right, next one. Hey, Matt, I'm the man. Thank you for introducing me to UVXY. I want no other ticker. All the other ones have let you down bad. Yes, so we got involved with this. It was episode 18, I believe, when I had the light bulb moment, and I used to shoot it in the room or whatever. So you can watch episode 18, Ask Matt. And I said, boom, light bulb moment. We had a stock. There was an offering. It got hit. There was something else. It got hit. Meanwhile, for those weeks, I've been calling the market on fire. I was like, yeah, the market's dipping. It's going to recover. It's going to dip at 10:30. Do you remember all those updates for anybody that's been with me that long? So, yeah, we got off track. I started calling stocks. I got tilted 2 weeks ago with that NTLA puts because the mathematics didn't make sense, and I overly leveraged myself. And then I had some clown that was heckling or something like that, and I just got disheveled. I'm in my right mind now. I don't give a shit about anybody else. I want to teach you guys. I want you guys to learn the rules, the lessons. I don't want you to see, oh, here's the lesson for today. I almost forgot it. Another lesson. So please watch the end. And then here it is. Ready? When you make a mistake and you break a rule, I want you to have a notebook. So the same way I want you to have spreadsheets, and I talk about spreadsheets, I want you to have a notebook. And you break a rule today, I want you writing it down in your notebook. I bought an option before 10:30 a.m. Or I averaged down too soon. Or I put in a bid when I thought the stock could still be dropping. Whatever the rule is that you broke. Because remember, when we average down, we're calling the bottom. So whatever you thought you were doing wrong, because I've had people tell me when I was buying that position, I knew it was wrong at the time. I felt uneasy about it. If you ever feel uneasy, you don't have to buy a position. There's always a game tomorrow, like baseball. There's always a casino open. There's always a sporting event. There's always whatever it is. There's always tomorrow when you can do it. So I'd rather have you err on the side of caution. Don't enter into every position that you think is good. If you were correct about every position, you'd be, owning your own hedge fund or something to that. Okay, so again, please, every time you break the rules, in a notebook, on your computer, timestamp it, okay? Today was July 17th. I bought contracts too early in the morning. I saw the market dipping. I thought it was over, and it wasn't. I missed calling the bottom. Whatever your mistake is, write it down. So here's what's going to happen. After you keep writing this notebook, and it sounds stupid, but you're going to keep making the same mistakes. However you blew up your account and you found me on YouTube, or however you did things in the past, and you're learning to trade a little more efficiently. The point is, the rules work, the lessons work. So here it is. Take a notebook because you're probably still doing the same thing. Write it down. I bought before 10:30. I bought before. Whenever you do it, and you're going to see after 2 weeks, 3 weeks, you're going to look at the same rules that you broke, and you're going to see it's not that you're breaking 6 or 7 rules. It's going to be you're breaking the same rule over and over again. Your rule might be like, I paid too much, I had FOMO. I paid too much, I had FOMO. If you write that down 5 times out of a 15-day cycle, then you have to understand you have FOMO, you pay too much. So if you get excited about something, here's what you can do. I'm going to pay $2.50 for this option. And you say to yourself, no, I'm going to put in an order for $1.80, 70 cents less, 30%, 28% less. Okay? You either get it on a super sale or you're not involved. Okay? Me, I had FOMO with UVXY. If I just put in at $28.50, all of my positions, which I mentioned this morning, $28.50, and someone said, hey, I think you made a mistake. I think you meant $27.50. If I put everything at $28.50, I would have been okay with everything going in there. No, I wouldn't. That would have been stupid. All right, never mind. Next question. See, I admit when I have dumb thoughts, and I say a lot of thoughts, and I'm like, no, that doesn't make sense. That makes sense. And when it makes sense, I look at it again. All right, next one again. All right, yeah, you follow the rules, 10-cent bid less than contract, and you got it. Yeah, so Edie, it doesn't have to be 10 cents less. Now, if you're buying a $90 contract and you bid $80 and you get it, yes, you're saving about 11%, okay? If it's 250 to 240, okay, you're only saving like what, 4%. It's not such a great thing. It is a good thing that you save 10, but maybe you should have saved more. If it was 280 and 260, so please choose accordingly. But if you're saving 11%, that's good. So I might look at a percentage-wise instead of 10 cents less on the bid. I might go 10%. Okay. Instead of paying $1.90, I'm going to start paying $1.70. Instead of $5, I'm going to pay $4.50. Just do it. Try it. The next time you're going to buy an option, if you're going to pay $3, pay $2.70. Now, I don't know if it's going to work. I guess it would work for everything. If you're buying a 60-cent option, you could put in for 54 cents. As long as you were going to bid 60. The option's probably at 80. You're like, I'll buy for 60. And then you say to yourself, all right, 54 cents. Remember, I don't like that cheap of options. All right, next question, comment, please. All right, hands of God. Will there be new 2024 strikes available for options in August? If so, should we wait for them? It won't be in August. It'll be when there's more demand. So I would assume definitely by October, probably by September. You telling me those don't exist now? I wish I knew what stock you were looking at, because I thought some of them have super leap. I thought there were like 2-year contracts on some of them, but I guess not for the ones you're looking at. Actually, I could look at Apple. I mean, Apple would have a demand like that, right? I'm just surprised. I've never gone that long out. I used to go, thinking of leap years, I only did that when the Dow was just completely beat up. So let's see how long options go out. Yeah, no, they have June 2023, 700 days for Apple. So when contracts are there, so you say to yourself, how come some options have weekly contracts and some options only have monthly contracts? You ask yourself why. It's based on demand, okay? If there were demand for weekly contracts and there was high volume, they would exist. So the fact that Apple has contracts dating out 700 days from now, that's pretty crazy. Okay, everybody, thank you so much. Have a great weekend. Please share this with people. I truly appreciate that. I'd like other people to see my videos. I know it's a Friday, but if I tweet it, if you share it, if you send this link, which you can do at the bottom of the screen, if you like it, please like it. If you don't like it, tell me you don't like it. Make a comment. Tell me where I can improve for you. Other than that, have a good weekend, everybody. Thank you.